The outlook for the first half of 2025 for the ASEAN economies is something that we will talk about today. Let's start off with Indonesia, the biggest of the 5 economies that we cover. The political transition in 2024 for Indonesia was smooth. Indonesia's president is now Prabowo Subianto. He took over the reins from President Joko Widodo, who held the post for 10 years. The question that always comes with political transitions is the degree of political and policy continuity that we will see, and what sort of stamp the new president wants to put on growth and development in his tenure as president. In Indonesia's case, the first few steps by the Prabowo administration have been positive. The reappointment of Sri Mulyani as the finance minister, Erick Thohir as the SOE minister, Airlangga Hartarto as the economics coordinating minister have all proved positive. Markets and investors took positively to those developments, and in due course we've realized that President Prabowo is also willing to stick to Indonesia's long-held fiscal conservatism, which was a concern when he became president, because he did suggest that fiscal deficits will be extended beyond the 3% of GDP legal limit. Now the question is, what does President Prabowo want to achieve during his term? He has stated a few things. One is he wants GDP growth to be above 8% in terms of the rates itself. Currently, the Indonesian economy is growing at a very steady average handle of about 5%. He wants to also create a new state revenue agency. He would like to increase FDIs across the board. He's very keen on increasing social development expenditures, as well as continuing with the mining upstreaming processes that we've seen under President Jokowi. The overall package deal in terms of what we're seeing from President Prabowo is likely to be positive. We do not think that Indonesia will be hitting growth rates of 8% at least in 2025 and 2026. Our growth rates are more stable at around the 5 to 5.1% handle. We do think that the inflationary picture in Indonesia is now far more manageable than it was in 2022 and 2023. Headline inflation has come back to within Bank Indonesia's target of 1.5 to 3.5%. Core inflation has also been steady, and BI has been very focused on maintaining IDR stability, while the growth picture has been quite stable. I think from here we will discuss a little bit about fiscal policy, because it does have very direct implications for the growth and the macroeconomic development outlook. In terms of fiscal policy for 2025 at least, the fiscal deficit has been pegged at about 2.5% of GDP versus 2.7% of GDP in 2024. The 2024 deficit was widened to 2.7% from an original 2.3%. This is largely because expenditures were growing at a much faster rate than revenues were being collected, and revenue growth was weak. As we go into next year, we do expect that there will be an improvement in revenue growth, while expenditures will remain focused on capital expenditures as well as some operating expenditures such as civil servant salary increases and so on. The story here for Indonesia is, how much does the fiscal deficit need to increase for you to be able to push growth to the levels of 8% that have been stated as desired? The key here would be a few things. One is there is a need to increase the revenue to GDP ratio for Indonesia above the levels that we have currently seen. The revenue to GDP ratio for Indonesia is anywhere between 10 to 12%, which is far below regional peers. At the same time, there are some low-hanging fruits in terms of reform that can be achieved on the expenditure side, namely removing or at least rationalizing fuel subsidies. Both of these can be achieved and are likely to be achieved to some degree through the extent of 2025. However, the budget in 2025 does not allocate for any price increases in retail fuel as far as we can tell. Looking on the revenue side, there is a sense that the government wants to increase revenues. It's looking at creating a state revenue agency, but it is also looking at introducing reforms such as tax amnesty, which has done in the past successfully to some extent, and also increasing the tax base. So far as we have heard, the VAT increase scheduled for January 2025 remains in place. However, recent statements by policymakers have been contradictory, so we will continue to watch what happens on that front. With fiscal policy relatively supportive of growth, well contained and within legal limits. The onus to actually support growth or keep it stable falls onto monetary policy to some extent. In that sense, monetary policy has been fairly dichotomous in the way it's worked in the last couple of years. As BI describes it, it is a multi-pronged approach to policy. On the one side, it's supporting growth by basically loosening the reserve requirements for certain industries, as they call it, targeted industries. And at the same time, it's using the policy rate, which is the BI rate, to basically target or keep the exchange rate, which is the dollar IDR rate, stable. As we go into 2025, the uncertainties on the global front are numerous. To name a few, we do not know the timing, the method of implementation, the goods possibly of tariffs that could be imposed by President-elect Donald Trump in the US on global goods. China has clearly been in the firing line for him. Indonesia has not been signaled out explicitly. However, if there are tariffs on all global trading partners, Indonesia will be impacted. Our analysis suggests that Indonesia will actually be the least impacted among the ASEAN countries, along with the Philippines. However, the extent of the impact will really depend on the details, which we are lacking at this point. That said, Indonesia continues to build resistance and resilience against external shocks, and we do expect that Bank Indonesia will also follow in this suit. To that extent, we've actually reduced the number of cuts that we expect from BI in 2025, or indeed even in December 2024. In the current cycle, we expect BI to cut by a cumulative 50 basis points more, following the 25 basis point rate cut in September. As such, we expect the policy rate for Bank Indonesia to end 2025 at about 5.5%. In conclusion, 2025 will be a challenging year, an interesting year. It's a mix of fairly complicated known unknowns that we will all have to grapple with. For Indonesia, we're still sticking with a story of fairly stable growth, manageable inflation, a modest fiscal deficit, and a central bank that is extremely cautious and measured in its approach to rate cutting.